welcome to this another episode of ECCB Connects. This week we'll be looking at the issue of correspondent banking relations, and to discuss this important issue we have with us Deputy Governor Mr. Trevor Brathwaite. Deputy Governor, welcome to ECCB Connects.
Thanks for showing on. Nice to be back again.
Deputy Governor, within the past few months, we've been hearing a lot of discussion about regional commercial banks losing their correspondent relations with their international banks. We've also been hearing of the term de-risking. So when we hear about correspondent banking relations and de-risking, what exactly is happening here?
Well, the two are not necessarily the same. So let me explain de-risking. De-risking comes about from banks, international banks, who have correspondent relationships with our banks in our region, terminating the relationship because they feel that it is too hard for them to go through all the risk-based procedures that the FATF has outlined that they should need to take. So they don't want to take all the risks involved, so that's where the term de-risking comes from. The part of this then is it affects the correspondent banking relations. So you and I and all our citizens from time to time will want to buy an item from the United States, for example, which is in US dollars. So we will go to our bank and then we will use our EC dollars in order to pay for that transaction. The bank, on the other hand, will have to pay the US supplier. So the way that our local bank will pay the US supplier is that they will now transmit that money to a bank that they have a relationship with in the United States. And then that bank will pay the supplier. So without that channel, then it means that it will be very difficult for our citizens, for our business persons to purchase items from, let's say, the United States or even from Europe. That means that it will be blocking trade in our region because we import most of our stuff from the United States in particular. So our business persons will not be able to buy inventory to sell in the shops. People will not be able to buy stuff from Amazon, say. Parents who send their children to school in the United States will not be able to pay for their fees, will not be able to pay for their upkeep. And some of our folks who go overseas for medical attention, they might not be able to pay for the cost of medical care in the United States. So it affects a wide array of our citizens and business persons in our region.
And this is indeed a serious issue.
It is quite serious because, as I indicated, we are important nations. So everything that we use, most of everything that we use, we import. For you to import, you must have the ability to pay for those imports. Even if you had a lot of EC dollars to pay for your transaction, then without a correspondent banking relationship, that's where it stops. The local bank will not be able to process that transaction on our behalf, and therefore no merchant will send goods without the assurance of being paid.
And especially now, since we use a lot of credit cards and online shopping.
Especially now. And the other part of it that affects, and is likely to affect us, is that we are tourist countries. Tourism is our main revenue earner. And there are instances in other countries where they have been completely de-risked and there's no correspondent banking relations. Tourists have paid for accommodation using their credit cards and what have you, and the money cannot be remitted to the country. So the country loses out from tourism receipts.
So, Deputy Governor, what is being done to address this all-important and serious issue? And we'll start from the level of the ECCB.
Well, from the level of the ECCB, at our last Monetary Council meeting, the Monetary Council agreed on a 4-pillar approach. Diplomacy at the highest level, getting our banks to sign up with a SWIFT Know Your Customer portal, getting our banks to consider consolidation and amalgamation so that there'll be more volume of transactions, because one of the issues that has arisen from the correspondent banks is that there is not sufficient volume for transactions. So if
for the international banks to continue doing
that's
business.
right. So if we try to consolidate and amalgamate, then that means the banks then will have more volume, and it means that the international banks might be more favorable to providing these services to our region. So a Caribbean bank in the U.S. Is one of the considerations that we are thinking about, so that it can offer services to our local banks in the United States.
Persons have questioned about, how will this actually work, this Caribbean bank in the U.S.?
Well, it's not, the proposal is not for it to be a full-fledged bank, but just to offer services for transaction purposes.
Just
so it will be a clearing bank, so to speak,
purpose.
for that particular purpose. So the idea is not to have a full-fledged bank, doing all the banking services that we know about, loans, deposits, etc., but just to have a clearing institution so that the banks can facilitate transactions into the United States.
I know some work is also being done at the wider level, Caribbean region, and you have attended several meetings. Tell us where we are with that.
Okay, so following our meeting at the Monetary Council, where the Monetary Council agreed on the 4 pillars, there was a CARICOM intersessional meeting, heads of government meeting in Belize, which I attended, representing the central bank. And these proposals from the council was put on the table and they were accepted. So Prime Minister Brown had been named as the chair of a subcommittee on de-risking at the CARICOM level. And the primary purpose for these individuals, the heads of government, is to pursue the diplomatic role that we had suggested should be done. And as a result of that, there will have been a couple of meetings at the highest levels in the United States, the last being of the Vice President Biden in Washington recently, where that matter came up. So what we're trying to do is to make sure that there's a lot of action by regulatory bodies in the United States. The Fed Reserve, the Central Bank of the United States, the Office of the Control of Currency, which is another regulatory body, and the State Department and the Treasury Department, so that these persons can be sensitized as to what de-risking and lack of correspondent banking can do to our small countries. Because you realize that we are very small in terms of population size, and then we're just a little pin drop in the whole range of banking in the entire world. But we are the ones that are affected the most because of our posture to import most of our stuff.
Given the seriousness of this issue, there is the need, of course, to move quickly on having all of these issues addressed. What's the next step?
Well, the next step is to continue the diplomatic speed on this, and then continue to talk to the regulatory bodies. So there was a meeting in Washington recently where the regulatory bodies were invited. It was sponsored by the World Bank and the IMF, and we were there to press the issue with respect to the regulatory bodies and how they can work around it. We got some sympathetic air, but in some cases, the people that you are speaking to are not the ones that are affected by de-risking or correspondent banking. So some of them don't think that it is much of a muchness, if you want to put it that way, because they are not affected individually by this. And so it will be a little hard to convince persons that, this part of the world needs the attention. And as I say, we're just a small group of individuals, but we have to push and keep pushing so that we can get the necessary recognition. I must say that recently we see another group of banks coming into this area and offering correspondent banking services. So some of our banks who have received notices from their main correspondent bank, and in one case, one received notice a week ago that the correspondent banking relations will be terminated in August. So they have begun having discussions with another group to see whether or not they can get correspondent banking relations. So there's a replacement effect, but of course these things come with a cost, so that even if they got correspondent banking relations re-established with another institution, it might cost them a little bit more than what it was before. But one has to weigh that cost against not having correspondent banking. So what's the choice? A little more cost to get correspondent banking, or no correspondent banking at all?
So we do have cases within our banking system where their relationship, their correspondent banking relationship, has actually been severed.
There's one bank that received notice last week. There was another bank in another territory for which their correspondent banking relations with a European bank was terminated. There have been notices that have been issued to other banks, and most of those notices are issued to our national banks, where there's a potential threat of the cutoff of correspondent banking. In one particular case, the bank asked for an extension, which they received, but that extension was not for an inordinate amount of time. I think it was about a month or two. So shortly, and they are pursuing other relations, shortly they too will be severed. Other banks now have received notice of increase in fees. So in some cases, fees have been doubled so as to maintain the correspondent banking relation.
What will it really mean for our people if this issue is not resolved favorably?
Well, Shomal, it could mean that our citizens and our business persons may be in a position where there will not be any economic activity, all right? So you and I, if you want to take it to the extreme, will not be able to go and shop in a supermarket because the supermarket will not be importing the stuff that we like to buy, right? There might be an advantage to that, so they might go more local, but then there's a supply issue. You and I will not be able to even buy the shoes or clothes that we wear. Online shopping might be in jeopardy, right? Cars, we don't manufacture cars here, right? Tires, parts for our vehicles. So the list goes on and on.
Direct and serious impact.
Direct and serious impact. But we hope it doesn't come to this. We really hope, we are very optimistic that the powers that be will listen to us, and we see some hope, but we need to keep pushing the issue all the time.
Deputy Governor, thank you very much for speaking with us on ECCB Connects.
Thank you very much for inviting me again, Shola.
You're watching ECCB Connects, protecting our currency, developing our region. And now for this week's financial tip.
Hello, this is Candy Williams, a teacher at the St. Augustine Primary School in Montserrat and a graduate of the ECCB Savings and Investment course. Avoid putting the bulk of your investments in a single instrument, company, or industry. It is also important to ensure that your investments are spread across different investment instruments to support your investment objectives, risk tolerance, and performance aspirations.
To view any episode of ECCB Connects, anytime, any place, at your convenience, check out our YouTube channel, ECCB Connects.
That's it for this week's episode of ECCB Connects. Thank you very much for joining us, and we do encourage you to subscribe to our YouTube channel. See you next time.